Welcome once again. This is Pinnacle Professional College, and today I bring to you another lecture on strategic case study and strategic case study. Very, very important. Today we'll be studying internal analysis. We'll be studying internal analysis, and we'll be looking at strategic capability, customer needs. We'll be talking about critical success factors. What are critical success factors? And then we'll delve into the value chain, customer relationship management, resources and competencies, competitive advantage or capabilities. And then we would assess strengths and weaknesses. So we are looking at the internal environment. We are analyzing the internal environment. So this is what we'll be discussing today. If you haven't subscribed to the channel, please do so. And please share this video with friends who would need it. Now, when we talk about internal analysis, what exactly do we mean? What exactly do we mean? We are looking at a company's internal environment. Now, there are two fundamental environments. One is the internal environment, and the other is the external environment. So the internal environment is looking at what pertains inside the company, right? So the things that occur inside the company, whether good things or bad things, good factors or bad factors. And that's what we'll be focusing on. The external environment is factors that pertain outside the organization. So when we talk about internal analysis, we are looking at inside the organization. We cannot talk about internal analysis without talking about strategic capability. Strategic capability. Now, what is strategic capability? Strategic capability is basically the ability of an organization to perform in a particular area. To perform in a particular area is the ability of an organization to perform in a particular area. Very, very important. Very, very important. The ability of an organization to perform in a particular area. In a particular area. That's what we mean by strategic capability. Strategic capability. Now, you might have heard the term core competencies. Core competencies. Core competencies. Now, what are these core competencies? Core competencies are basically these are strengths that an organization has. These are strengths that an organization has that helps it to create competitive advantage. These are strengths that an organization has that helps the organization to create competitive advantage. Very, very important. Very, very important. Now, so when we talk about core competencies, that's what exactly we mean. So you can see from here that it says it can also be described as the ability of an organization to use its core competencies, right, to create competitive advantage. Very important. Very important. So once you've understood this simple principle of strategic capability, you can then tie this in with our whole discussion on internal analysis, right? Strategic capabilities are internal to an organization. They are internal to an organization. And so they are the things inside the organization that give the organization an edge. Very, very important point. In the previous chapters, we have described the environment of an entity. We have described the environment of an entity and how an entity can succeed by exploiting opportunities and dealing with threats that emerge in the environment, right? So we are looking at here, it's talking about, in previous chapters, what we've discussed, which we've talked about in previous episodes, right? In previous episodes, we discussed more about the external environment, right? But even though monitoring the environment is important for identifying opportunities and threats, right? It does not necessarily give an organization competitive advantage. Competitive advantage comes from within the organization. Competitive advantage comes from what? Within the organization. Very, very important point, right? So strategic capability comes from competitive advantage. So we see here that it says, however, monitoring the environment, opportunities and threats is not sufficient to provide an entity with competitive advantage, right? So what it means here is that, scanning the external environment, I should say, it's not sufficient. It's not that it does not offer any competitive advantage at all, right? It's not that it does not offer any competitive advantage at all. It's that it is not sufficient to provide an entity with competitive advantage. You also need the internal side of things to be able to compete in the market. Very, very important. Very, very important. So I hope this is quite clear. So strategic capability comes from competitive advantage. Competitive advantage comes from successful management of resources, competencies, and capabilities, right? So anytime you hear the term, strategic capability, you know exactly what it means, right? Anytime you hear the term strategic capability, you know exactly what it means. It simply means, the ability of an entity to perform using its core competencies to achieve a strategic objective. Very, very important. Very, very important. So what are we talking about here? So what are we talking about here? We are talking about strategic capability. So let's look at the definition that's given. Strategic capability reflects the ability of an entity to use and exploit resources that are available to it, right? The ability of an entity to use and exploit resources that are available to it through the competencies developed in the activities and processes it performs, the ways in which these activities are linked internally and externally, and the overall balance of core competencies across the entity. So this is a very long definition, but what you need to know here is that strategic capability is basically the ability of the entity to use and exploit resources. An organization would have resources, but the company must learn to use it and exploit it in such a way that it benefits the organization. Through the competencies developed in the activities and processes it performs, right? So we see another key word there. We see the word competencies or competencies. So first we saw resources, we saw competencies, and now and another word we'll see is activities. So when you talk about strategic capability, you are talking about the firm being smart in terms of how they use and exploit resources, and using their competencies to develop these resources in such a way that it benefits the entire organization. Now, let's move on to achieving strategic capability. How is strategic capability achieved? A resource-based view of the firm is based on the view that, so there are many views, right? Number one is a resource-based view. A resource-based view of the firm is based on the view that strategic capability comes from competitive advantage, which comes in turn from the resources of the firm, right? So when you look at the resource-based view, it's basically saying that this is how organizations gain competitive advantage. They gain competitive advantage through strategic capability. And strategic capability is derived from the wise use of resources. That's the resource-based view, right? The resource-based view, what underpins it or undergirds it is the wise or the prudent use of resources. Very, very important. So let's look at this simple chart. Right? You see strategic capability at the top. Right? Then you see competitive advantage. Then you see entities delivery mechanisms. Then you see core competencies. Then you see resources, right? So you see resources at the bottom, right? So it's how these resources are used. If they are used in a very organized, systematic manner, in a way that benefits the organization, it becomes a core competence, right? If it's able to deliver these competencies to an end user in a very structured way, that's where we are looking at the delivery mechanisms. And if they're able to do this very well, they're able to gain competitive advantage, which in turn gives them, a strategic capability in that area. So let's use an example, right? Let's say you have a resource. The resource is, let's say, human labor, right? Human labor is raw, right? Now, to develop the human labor into a core competency, you need to train that labor. You need to give that labor specialized training, right? So let's say a resource would be a human being, right? A core competency will be a human being who has been trained specifically in tax accounting, where the human being has been trained so much that they understand how tax accounting works and they are able to deliver value to the market. The third layer, which is the entities delivery mechanisms, is where after you've trained, based on the example we've used, after you've trained the individual, right, you now need to sort of deliver the individual to the market, right? So the individual has to be advertised, and that's why when you finish your professional exam, you now have to come and advertise yourself to the market to find maybe a job or whatever it is. So the entity has delivery mechanisms to deliver core competencies to the market, right? And if they are able to deliver this so well and their competency is very, very good, then they gain competitive advantage. If they gain competitive advantage, then it means that they have, that becomes a strategic capability for them, right? So remember this pyramid. It's very, very important. Very, very important. For those who are fans of acronyms, you can create an acronym for this. You can create an acronym for this to serve as a memory aid. So understanding customer needs is fundamental to understanding and achieving competitive advantage, right? Which is, an idea that we can all understand. To be competitive in the market, you need to understand what the customer needs, right? Now, so let's look at customer needs. We'll be talking about the marketing approach. We'll be talking about what our customer needs, the 4 P's of the marketing mix. So what's a market? A market is where, customers and sellers meet, right? It could be a physical place, it could be online, it could be anywhere. So markets can be defined by their customers and potential customers. Companies and other business entities compete with each other in a market to sell goods and services, right? So to succeed in a market, you need to have some superior kind of service. You need to have some superior kind of service. So a lot of business, right, is dependent on how you market, or your marketing approach, or your delivery mechanism, which we talked about when we are discussing competitive advantage and strategic capability. It's how you deliver to the customer, right? How you deliver to the customer. So there are a lot of companies who have a good product but a poor delivery mechanism, and so their product is not really known out there. So that's very, very important to note. Now, what are customer needs? What are customer needs? Every customer has a need. Every customer has a need. right? There's a reason why they buy products, to fulfill a particular need, Usually, customers would have competing products. There would be competing products. So customers have to make a choice, and a major factor in making that choice could be price, or sometimes it could be the quality of the product, right? There are several reasons. So we would look at some of the factors which customers take into consideration to buy, what influences the buying decision of customers, right? So number one could be price, number two could be quality, number three could be availability, how convenient the purchase is, or even how well advertised the product is. So these are all factors that could affect the buying decision or the purchase decision. There are many different types. Of customers, each with their own particular needs. A product that meets the needs of one customer successfully might not meet the needs of another customer. That makes sense, right? So there are different kinds of customers, but we'll talk about how they are grouped. Customers can be grouped into three broad types. Number one is consumers. Number two is industrial and commercial customers. Number three is government organizations and agencies. So we have consumers. This is the first group or category of customers. These are people who buy products and services for their own personal use. They are consumers. Industrial and commercial customers, on the other hand, are business entities who buy products. Then government organizations are agencies or government agencies that also buy products. So you have three groups of customers: consumers, commercial customers, and government organizations. In some markets, most customers are consumers, right? So depending on how the market is, you might find consumers, you might find commercial customers, you might find government customers. And all their needs vary, and what they are looking for vary, right? And what they are looking for vary. So, for instance, a commercial customer would, one of their greatest needs would be to bargain when it comes to price. So all of these groups have their own needs. That's basically what we are saying here. Now let's talk about the 4 P's of the marketing mix. Now the marketing mix, if you haven't heard about this before, the marketing mix is an important model that you need to know for your exam. So what is the marketing mix? Very, very crucial. Very, very crucial. So the marketing mix is basically a model that has been set aside. This is a model that has been set aside to understand the 4 pillars of marketing. Very, very important model to understand the 4 pillars of marketing, right? And what do I mean by the 4 pillars of marketing? What do we mean by that? What do we mean by the 4 pillars of marketing? When we say the 4 pillars of marketing, we are referring to products, we are referring to price, we are referring to place, and we are referring to promotion. These are the 4 P's of marketing. So you have products, price, place, promotion. And every organization needs a mix of these 4 P's in order to be able to, do business. So first of all, the company will need a product. So when we talk about a product comes in a package, right? So we are looking at the features of the product, the product's quality, the benefits of the product, the after-sales service, stuff like that. So product refers to the design features of the product and the product quality, right? And the product is basically what the organization is selling. In addition to the product itself, features such as short lead time for delivery and reliable delivery could be important, right? So your product is basically what you are selling, what you are selling. So that's the first P. The second P is price. Price is the selling price of the product, right? So how much are you charging for the product? Then you have place. Place refers to the way in which the customer obtains the product or service. So when we talk about place, place is simply the channel of distribution, the delivery mechanism that's being used. The delivery mechanism that's being used. So that's what we mean by place. It's a channel of distribution. So there are some products that you buy it in shops. There's some products that you buy online. All of this is place, where you bought the product, the channel of distribution, how the product got to the end user. That's what we mean by place. Then you also have promotion. You cannot create a product without promoting it. It has to be advertised. It has to be promoted, right? So that's very, very important on the promotional front. Marketing can be analyzed at a tactical level, and decisions about the marketing mix might be included within the annual marketing budget. However, marketing issues can also be analyzed at the strategic level. Now, this is very, very important to understand, right? You can do this marketing analysis at both the tactical level and the strategic level. We already discussed what these mean, right? And when you're looking at marketing from a strategic perspective, you're trying to understand what customers will want to buy, what are customers looking for? What are they seeking to purchase, and why are even some products more successful than others in the market? Very, very important. Very, very important. Now let's move on to critical success factors. A critical success factor. Here, I'll touch on it briefly, and then in our next lecture, we will talk more about it too. Here, we'll define what a critical success factor is, right? We'll talk about marketing and critical success factors. We'll talk about KPIs, key performance indicators, and etc. We'll talk about Johnson and Scholes model for approaching critical success factors. We'll talk about benchmarking. So what's a critical success factor? What is it? As the name suggests, a critical success factor are basically factors that are essential to the success of a business entity, right? So these are factors that are critical to the success of any organization. These are components of an organization's strategy that they must excel at to outperform their competition. And that's how Johnson and Scholes will define it. Anything that an organization has to be really good at to outperform their competition. So if you take the phone manufacturing industry, right? What is the critical success factor for Apple, right? A critical success factor is that they must constantly innovate to be able to beat their competition. When management are analyzing the market and customers in the market, they should try to understand which factors are essential to succeed in business, right? So before you go into a market, you need to understand, what are the things that I need to do to be successful in this market? What are the essential factors that, would help me to succeed in the market? And there are some factors that are very important, that are essential. Some are non-essentials, right? So it's important to identify those critical success factors and set performance targets around them. Very, very important. Very, very important. So let's look at this example. A firm of accountants has an office in a major city the partners are considering an expansion of the business by opening another office that's 50 miles away. The partners want to expand their business, but they are cautious about investing in a project that might not succeed. They have a meeting, you see, they're having a meeting to discuss the factors that would be critical to the success of the new office. And they come up with some factors. Number one is employing top quality accountants. That's a critical success factor. Charging lower fees than other accounting firms. Obtaining a minimum number of clients. You see, obtaining a minimum number of corporate and individual clients or private clients. Offering a full range of accountancy service and locating the new office in a very good premises. Right, so all these factors are critical. Right, all these factors are critical to the success of this organization. Right, so they've come up. So basically, they've come up with the things they need to do in order to take over or succeed in the market. So even though all of these factors could contribute to the success of the organization, not all of them are critical. So when we are talking about critical success factors, take note of the word critical. They are not just success factors, but they are the ones that are very essential to the success of the organization. Right? So you identify those critical factors and then you set performance targets around them and make sure those targets are achieved. So let's talk about marketing and critical success factor for products and services. Right. So the previous example considers the critical success factors for a new business venture. That was an accounting firm. Strategic planners might want to identify the critical success factor for a particular product. These are the features that the product must have in order for it to be successful with customers. Right. So for a product to be successful with customers, it must meet their needs. Right. It must meet their needs. And when you are marketing your product, you should market it in line with those critical success factors. That's very, very important. So this is very, very key. Like I said, I wanted to introduce critical success factors to you, but we'll be discussing it a lot more in our next lecture. So if you haven't subscribed, please do so. And this is where we'll bring today's lecture to an end. And in our next video, we'll continue more on critical success factors. Thank you and have a good day. Bye-bye.